Let's go over the best investment, in my opinion, that every beginner in the stock market should have. And I do want to save you guys time. I'm not going to save this for the end of the video. The investment that I'm going to be talking about is an ETF, so it's an index fund on the S&P 500 index by Vanguard, and it's called VOO. And now I'm going to explain exactly why this is the best investment that you should get into as a beginner in the stock market, or frankly, anybody in the stock market. Now, if you don't know what an ETF is, it's basically just a basket of assets, just like a mutual fund is, except you can actually trade ETFs on the stock market, just like a share of Apple or Facebook or anything like that. So if you've got one share of a specific ETF, then you can trade it just like anything else on the stock market. So in a way, if you're new to investing and you don't quite know which companies you want to invest in, then you can always start with an ETF, because you can start with a group of assets. That way you're more diversified. So in this case, we're talking about the S&P 500 index, which is the top 500 US companies. And you really can't go wrong with that, because as an average, they've averaged about 10% ever since inception. And that's a really good return just as an average with a diversified portfolio. Now, there's a lot of ETFs out there that you can choose from, and there's a lot of brands as well. So when it comes to the selection, it's really hard to know who to go with. But in general, my personal opinion, I feel like everything that Vanguard makes and Charles Schwab makes is a really good asset that you can look into. So pretty much everything that those guys sell, you really can't go wrong with. And that's one of the reasons why I'm looking at the VOO as one of the best assets that you can have as a beginner or just anyone in the stock market. Now, for starters, they've got almost $166 billion in assets under management, which means that's how much money they have in the pot. So technically, if the stock market crashes and a lot of people pull out their money, then that asset is still going to be intact because they've got so much money funded into it. So that's one of the reasons to look into the VOO, is because the assets under management are almost $166 billion, and that is a lot of money. Now, the biggest reason why I'm a huge fan of the VOO is because of what they call the expense ratio, which is basically how much it costs you annually to own the fund. And this is only 0.03%, which competitively is so low for an ETF, and it's extremely competitive for mutual funds and other things like that out in the investing world. I'll explain more about expense ratios in just a minute here, but just for an example, if you had $1 million in the VOO, you'd only be spending $300 a year to have it managed, and that is extremely cheap. And then another cool thing about the VOO is that because it's a giant basket of assets, they do pay out a dividend, which is currently at 1.71% per year, which is a pretty good dividend when you really look at a whole bunch of different companies. So that's something to consider as well. Now, the current share price of the VOO is about $313 as of today. So if you guys want to get invested in the top 500 US companies, you're going to need about $300 to do that, just to get one share of the VOO. But it's obviously a lot cheaper than looking into the 500 companies out there and buying them all individually, which would cost you a lot more than $300. Now, back to explaining the expense ratio. When you're talking 0.03% for an S&P 500 index, I've actually seen expense ratios out there on mutual funds for S&P 500 indexes, which is the exact same thing, at 1.5%. So if you're looking at that over a lifetime of investing, that's where it kills you, because 1.5%, that doesn't sound like much money, but the problem is that you're losing that money that has the potential to compound over all of those years of investing. So if you're investing for retirement and you have a high expense ratio, then you can lose hundreds of thousands of dollars or even millions in potential money that could have been compounding over all that time. So for example, if the S&P 500 index averaged a 10% return, then you'd be looking at a 9.97% return with Vanguard, or you'd be looking at an 8.5% return with someone else that has a 1.5% expense ratio. And this is where the math really kills you, and I'll just go over this really quick here. So basically, if you invested $6,000 per year for 35 years at a 10% return with a 0.03% expense ratio, then in total, the money that you lost from compounding potential would cost you about $13,000 in lost money, and that is it for your entire lifetime of investing. But if you run the exact same numbers with a 1.5% expense ratio, so an 8.5% return over all of those years, then in total, you're going to lose over $500,000 in potential money that could have been compounding for you, all because of the stupid expense ratio that you had when you were young and you kept it all the way until the time you retired. So just keep that in mind. The expense ratio is huge when it comes to long-term investing. Honestly, if it's short-term, it doesn't really matter, but long-term, you are going to lose out on a lot of compound interest, and that is going to cost you a ton of money in the long haul. So honestly, I'm a big fan of Vanguard because they always have really low expense ratios. And then obviously they're just following indexes. So you really can't go wrong there, especially with the top 500 US companies. Because when you're diversified like that, if 1, 2, 3 of the companies don't have a good year, it's really not going to affect you overall because you're diversified in 500 different companies. Now, obviously there's a lot of different ETFs that you can look into, but VOO, I've always been a personal fan of, so check them out if you have any interest. Now, if you're new to the investing world, I've got an affiliate link in the description below for Webull, where they'll actually give you a free stock valued up to $1,600 just for depositing $100 and setting up an account with them. So if you want to get a free stock, definitely check out Webull. Also, if you just found this channel, I'm Jason with Honest Finance, and I make a lot of videos on different topics that'll give your life and your finances more value. So feel free to subscribe if you guys are into this type of content, but thank you for watching and have a great day.